Welcome to the What to Watch video update, where we're asked the question this week, will the post-election honeymoon continue? We're looking really positive right now. Maybe we're looking too positive. If you've ever heard the old saying that the market likes to climb a wall of worry, there's really not much the market is worried about right now. Of course, there are these geopolitical things that could escalate. There's something that could happen now that the election is over, but the market seems to really like the direction that has taken, at least to this point. But there's very few negative things right now based on all the different charts that I look at. And that's when I start to get a little nervous. Now, in Monday's session, it's going to be a little bit abbreviated because the bond market will be closed for Veterans Day. So the stock market's not really going to be able to key off of that. It might be below average with volume because of the pseudo holiday. Now, it's a real holiday, but the bond market is closed, but the stock market's open. That's what I mean by a pseudo holiday. And so if some hedge fund or some of the smart money decide to come in and take some profits, and there may not be much resistance for things to go lower. And when everybody seems to be happy, but even on a sentiment basis, we still have more room to go that I'll go through here in just a moment. But if everything is looking good, does that mean that the buyers are going to run out at some point? Now, we never go straight up or straight down. But like I said a minute ago, the market likes how the election turned out. In fact, there's probably a lot of that's a relief that it's even over. And they like what has been proposed as some of the changes that should take place when the new administration comes in. But we could see a potential escalation between Israel and Iran. There's still a war going on between Russia and Ukraine. There are domestic things that could happen in the US. So we just want to be aware of that. But as far as the stock market is concerned, this is what I'm calling a honeymoon phase. But as we know, honeymoons don't last forever. Before I get into the full-blown look at the charts, I want to tell you about the SPX investing program. It's a program that I have developed. It's up. It's going right now. It's free until the end of 2024. Feel free to check that out. There are additional videos that I post there. There's a link that'll take you to the website, a link that'll take you to a video. If you have any questions, you are more than welcome to send me an email. Also, this is just one video that I do during the week. The main foundation of the analysis that I do and all the charts that you'll be seeing here, I talk about these in the daily video, and we can see incremental little changes as they take place. So we may not know at any given point, is the market going to go up or down, but we're seeing some strength or weaknesses developing, and then that usually tends to give us a little bit of a heads up. Sometimes those warning signs will go away. Other times they actually lead to things. And I pick those out in the daily videos. So it gives you at least something to keep an eye on so that you're not caught off guard with things. Okay, let's go through and look at the positive side of things. I only have one chart on the negative side, and I could have just as easily put it on the positive side. That's how long the list is. Now, I've also included a third area. It's positive, negative, and then just things that we're watching. They're not really either positive or negative, but they could have an impact on the market. So there's actually another section that's now going to be included in this video. First, we look at sentiment, which is positive now. We had dropped below 50 and we were going with that, and we were looking more negative as we were going down. Now, when I did this video a week ago, the negative side was really leaning that way, and we didn't have as much on the positive side. Well, things have shifted. I mean, what a difference an election can make. Things are looking a lot more positive now, and sentiment is also improving. We're going up, so that is positive. When I say we still may have some more to go to the upside, when we get extreme is when we're getting up to 75. We're into the 50s right now, so we still have a little more room to run before folks are a little too optimistic from a sentiment aspect, at least when we look at this particular chart. Now, we look at the short-term version of the trend. That's the first thing that I do. What's the condition of the trend? Are we trending? Are we not trending? Yes, we are, because we're above 20, which is the blue line down here. If we drop below 20, that means we're in a non-trending environment. When we are going up or down with the dark blue line, that's the ADX. When we're going below the moving average, that suggests a weakening trend because we're getting closer to 20. We're starting to turn back up now and going above the moving average. So in the short term, we're beginning what looks like a strengthening trend. And the green line is above the red line. So that's positive. But there's a couple of things to be aware of here that are warning signs. You notice how the green line is getting really close to 40? And other times when we got to 40, now we could go above 40, but what happened when we got to 40? A lot of times that suggested exhaustion at best. Sometimes it can actually mean more of a decline. We're also keeping an eye on the red line. Notice how it's dropping already down below 20. Now that's positive because the green line is going up. But if we drop really to a low level, that may mean that there's really no sellers in the market. And then if we get the green line all the way up, that means there's no buyers left. So suddenly buyers become sellers at that point. Now, we don't know how it will play out, but we just want to keep an eye on this. Now, when we switch over and look at the intermediate term, and this is the real basis that I use for determining what's going on. I use the short term just to kind of confirm what I'm seeing also in the intermediate term, but I have the charts reversed here for this video. We're coming up. We're not at 40 yet with the green line. We're dropping below 20 with the red line, but we're also starting to see a strengthening trend here. So that's positive when you look at it just this way. But watch the green line on this chart. We'll also be keeping an eye on the red line. Another thing that's been positive is that we've seen a real increase in volume as we approach the election, and then after the election, we are seeing above average volume where we had been dropping well below average as we were working our way through October. Now that seems to be really picking up again, and we're going up. So that shows a little bit more conviction. And some of the charts that we're looking at, we're actually seeing a bit of an improvement when you compare price with volume. Volume is actually looking stronger than price, which can also be positive. This is a little bit of a concern here, but it's still positive because I like to keep the charts that I'm going to show you here together. This is what I call the smart money indicators, and there are 3 of them. This is the first one. We're still negative here. We're improving. We were coming back up, but the red line is pretty much flat. Now, we had an update on Friday, but this really didn't show any improvement. In fact, it went down a little bit. So we're a little bit concerned about that. We'll be keeping an eye on this one. And because we might see below average volume on Monday since the bond market's closed, this could continue to show some weakness. This is calculated not only using the direction the price is going, but it's also using volume in the equation. That's why I call it a smart money indicator. Shaken oscillator. This is still positive. We had come down, we dropped below this pink line here and bounced back up. That ended up being a really good signal because we've been going back up ever since then, and we crossed above the midpoint. So this smart money indicator is positive. And then we have the vortex where we saw a cross, where we're seeing the green line above the red line right now. Then we look at an intraday chart of large cap growth versus large cap value. They're both doing quite well right now. When it's even more positive is when the blue line is above the red line. And we look at an intraday chart of growth to value just for the S&P. This had been showing some improvement as we were starting to come through the early part of November. We saw the really big upthrust, and it didn't perform all that great on Friday, but it's not really showing any weakness, at least yet. Then we look at small cap growth versus value, still in a downtrend, but showing a big improvement as the small caps have now been kicking into gear a little bit here. Mid-cap growth to value also showing an improvement, but still in a downtrend. But when we look at S&P growth to value, we're in an uptrend here. And even though we're not really breaking out yet, we are showing some strength. We look at a growth versus value ETF coming up out of the rainbow, showing a real improvement here. Discretionary, really improving. This includes Tesla. This includes Amazon. And when we see this ratio really going up, that's another kind of growth area. And that also helps the market to go higher, where earlier in 2024, this had been more of a disappointing area of the market. Large cap growth hitting all-time highs here. So that's positive there. The VIX, which a week ago we were kind of concerned because we're above 20 with the VIX, we're really dropping now. Both here with the closing value, that's the line chart, and then the bar chart is the intraday open, high, low, close. But we may be coming down a little too quick. What I plot on here is an RSI based on 9 periods, and we're coming down, as the VIX has been coming down, to almost an extreme reading here. The momentum of the VIX, where a week ago it was positive, now it's dropping over and turning negative. Looking at the advanced decline line based on price, little bit of a concern here because we hit an all-time high with the S&P on Friday. We did not hit an all-time high based on price, but we are hitting all-time highs here based on volume. So we're seeing a little bit of an edge to volume. Sometimes when volume leads price, that ends up being positive. We saw a real expansion of the new highs, but not really seeing much of a change here with our 5-day moving average, but we're going up with the 10-day moving average here. And you can see an awful lot of green, not very much red, and a real explosive growth of the green. That just shows that stocks are making new highs. Then this should be included with the smart money indicators. This is the chart number 3 that I like to keep together, but they're not together right now. Don't really pay attention to this indicator down below. What this tries to do is measure how far away we are from the moving average. Well, we're crossing above the moving average here, and it's already giving us an extreme reading. I can't really manipulate this any differently with stockcharts.com. I could with other software that I used to use that I don't have access to anymore. The thing to look at here is, are we above the moving average? Yes. And if we stay above this, then the red line will continue to go up. That is positive. So we're positive with the Chaikin oscillator. We're positive here with the accumulation distribution. We're a little bit concerned about the Chaikin money flow. We would like to see some more strength out of that. The advanced decline ratio, short term 19, intermediate term 39, going back above 0 and looking positive there. When we look at the advanced decline line for the NYSE on a cumulative basis, we're not hitting all-time highs yet, even though the NYSE did hit a new all-time high. But we're not falling apart here either. And the regular NYSE advanced decline line is also improving, but not back to an all-time high yet. Here's another chart, the same idea, the NYSE advanced decline line, but it's calculated in a slightly different way. Not back to the previous high, but still looking quite positive. Common stock, still doing pretty good here, where we are making a new all-time high with common stock based on volume for the NYSE. So that is positive. And another chart that shows this volume is actually leading price. The advanced decline lines, looking good across the board here with NYSE common stock, S&P mid caps and small caps, all above advancing moving averages. This is a little bit of a concern, though. I usually only break out this chart when we're looking extreme positive. This is the rate of change going back from Friday's close to 5 days before that, 5 trading days before that, and we're extreme, and we've been extreme for a couple of days. Now, if you go back and look at other times when we had very high readings, that didn't necessarily mean a reversal, but it could mean that we might slow down for a while and actually maybe tread sideways at best. But sometimes when we get one of these, we actually see a decline. The condition of the short-term trend is measured by me as my definition is that it's 20 periods. We're above both of the lines and the lines are going up. So that's showing that the short-term trend is quite positive right now. We're above both the simple and exponential moving averages based on 20 periods. It'll be even more positive if the blue line crosses above the red line. That's the exponential moving average, and it goes faster. So if it goes above the simple moving average, which treats all the 20 periods the same, that just means that there's good momentum behind the price. Then we look at all the different moving averages here. We're above all of them, and all the lines are going up. That is positive. This is also a chart that I usually only show in the deep dive video, but this just shows how in the short term, we came all the way down to the 50-day moving average. We tested that a couple of times, and we were able to bounce up off of that, and we're looking quite solid. We're coming back up out of the rainbow now. The stocks in the S&P 500 that are above their 20-period moving averages, we had actually gone negative by dropping below 50. Now we're back to turning more positive. And I'm really only focusing on the short-term trend right now because the intermediate and long-term trend never did turn negative. It was the short-term trend that was under some pressure. Then this might suggest that we're overdoing it a little bit. This is how far up have we gone as measured by Keltner bands. And these are based on standard deviation, meaning if we get up in here to the +3 channel, that means that we've gone up pretty far, pretty fast. But it doesn't mean all hope is lost. You can see other times when we show really good upward momentum. We even go above the upper +3 channel, and we've done that at other times. So it doesn't necessarily mean things that have to reverse. But a lot of times when we get up into this area, notice how back in October, we started to go sideways for a while. The S&P McClellan oscillator, which had gone extreme negative, it dropped below this bottom line here. Well, we came back up and we're actually crossing back above zero. So it's now positive. And when the McClellan oscillator is positive, that means the summation index based on price is turning up. And we've already been going up based on volume. This is another indication that volume could be leading price higher. Then we look at the broader market. The NYSE McClellan oscillator also had been negative below zero. It's switched back to positive. So we're starting to turn up with the summation index based on price and volume. Swenlin trading oscillator. We had gone negative, even seeing some divergences between price and volume. Now they're more in lockstep with each other. We're back above zero based on price and volume here, and that has turned back to positive. The parabolic SAR, which spent 4 trading days with the dots on top, and then we shot up, and now we have the parabolic SAR underneath. When they're on top, the dots are on top. That means this is negative. When the dots are on bottom, we've now switched back to positive here. The momentum, we're switching over and looking positive. We've already switched over in the short term, and then I have 3 intermediate term oscillators. We're improving with the long-term oscillators, but they have not crossed over positive yet. The percent B indicator, we spent 2 days now above the upper Bollinger Band, and you notice that doesn't happen very often. And when it does, we tend not to stay there for very long. It could mean that we'll have to come down with price, or it could mean that the Bollinger Band will need to come up, or a combination of both of those things happening to bring this percent B indicator back down. Then we're getting kind of far away from the 20 period moving average. That's the boom indicator on this chart. When we're getting really extreme, that means we're far away from the short-term 20 period moving average, and price has a tendency to come back to that moving average. We're also getting kind of far away from the 50 period moving average. That's intermediate term. We're just showing an improvement here, but not any kind of an excessive reading when we measure the distance to the 200-day moving average. Then we look at the cumulative advanced decline line for the S&P based on price, but notice how we're setting a new high here based on volume. Okay, you could say this is a negative divergence, but you could also say this is a positive divergence since volume is leading price. But it's price it's the reason we buy and sell. We do that based on price. The bullish percent index, a week ago, the context was that we were going down. We're now starting to turn and go back up. So this has changed positive. We're also going back up with the NYSE bullish percent index as well as the NASDAQ 100 bullish percent index. So we're seeing this across multiple indexes now. And we're not really seeing much of a disconnect between the weighted version of the S&P 500, that's the regular S&P, and then the red line here is an equal weight, where all stocks are treated the same. They're both going up together. That just means that the broad market is also participating in the upward move. It's not just a few stocks like we saw over the summer when we were getting new highs here in June, but this line was actually going sideways, and people were saying it's only 6 or 7 stocks that are driving the market higher. You could see that with this chart. Well, what we're seeing right now is we're seeing more participation. Then, instead of using traditional Dow theory, which looks at the Dow and the transports, we swap out the Dow for the S&P 500, which is setting an all-time high. And instead of using the transports, we use the NASDAQ, which is setting an all-time high. So that's a confirmation. Then we break this down a little bit more. We use the equal weight version of the S&P, setting an all-time high, and an equal weight version of the QQQs, which is the ETF for the NASDAQ 100, setting an all-time high. So we're seeing across-the-board confirmation there. The Dow is setting an all-time high and above this R2 pivot level now. The NASDAQ setting an all-time high above this R2 pivot point as well. NASDAQ 100 setting an all-time high and above what had been resistance. The NASDAQ 100 momentum has now switched over to positive. Small caps, okay, real area of frustration. You know, upsurge back, upsurge back, upsurge back, upsurge back, upsurge again. Is this, is eighth time going to be a charm here or whatever it is? If the market is interpreting what they see in the election as being positive, this could be positive for small caps. Inflation seems to be under control, and the economy still seems to be doing quite well. There's other folks that say, oh, we're going to go into a recession. And we just might do that. We just have to see what is the market interpreting things to be right now. And right now, they like it. But of course, every day that can change. There's the opportunity for the scenario to switch to something more pessimistic. But right now, the small caps are looking better. And we also look at another index of small caps called the Russell 2000, looking really solid here, but maybe a little too solid. We're getting kind of extreme here with the RSI, but when you look down at the momentum as measured by the MACD, we are showing positive momentum. But when you compare it to the S&P 500 on a ratio basis, yeah, they're looking better, but they're still in a downtrend, and they've been in a downtrend going back to the beginning of 2023. We need to see this eventually cross, and we need to see more strength out of this to see, are the small caps actually getting ready to outperform their bigger brothers, the S&P 500. Mid caps also setting all-time highs here, showing some improvement that way. The Wilshire, a broad market measure, setting an all-time high. Total US stock ETF of 2,651 stocks, setting an all-time high. It's about as broad as you can get. The transports, which had just been going sideways for all of 2024, finally came back and surpassed the all-time high set in 2021. That could be encouraging. And then we look at a ratio between the NASDAQ 100 and the small caps, not falling apart, at least yet. We're still right up around this blue line. We look at the staples to tech ratio. Well, this is going down. That means staples are underperforming tech, and that's actually more positive. We are a little bit concerned because there was enough of an upthrust of staples to tech, showing that staples were outperforming enough to generate a golden cross here. If we stay below these lines, eventually we'll have a death cross, which would be more positive for the tech sector. Financial sector coming off of just setting a recent all-time high. FANG index, not on Friday, but on Thursday, set an all-time high. Now we're bumping up against some overhead resistance here in the short term. This longer term trend line held as support this time, but we're still not quite through this shorter term trend line right here. That would be even more positive if we're able to break above that. Then this is a thing called the Zohorchak method, and it doesn't generate very many buy or sell signals, but when it does, we pay attention. It had actually dropped down to 8. It was still positive, but it had been on a full-on 10 for most of 2024. A week ago, when we were starting to see some weakness, this came down to 8. Well, now it's back up to 10. So that's longer-term positive. And the market is still anticipating a soft landing. We see stocks outperforming 3 to 7 year bonds. And we also see in the broad market, the S&P 1500 outperforming shorter term bonds. The broad market is outperforming longer term bonds. And the tech sector is also, it's doing better. It hasn't surpassed this previous high, but it's coming up out of the rainbow now. The NASDAQ 100 weekly chart setting a new all-time high, well above the long-term trend line. And a ratio between the NASDAQ 100 and the Dow, not falling apart, actually showing some strength here. The 10-year yield. Now, this was causing some problems. The 10-year yield was really going back up. Now we started to come back down. The reason this is on the positive side is because the last few sessions we have been coming down. If this could continue to fall, that would be more positive for stocks. And then we look at risky bonds like junk bonds and more conservative bonds like government bonds. Folks are preferring the riskier bonds. They see the economic environment as okay, and so they're willing to take on more risk to get a better yield rather than taking on less risk but getting a lower yield with government bonds. The QQQs, the 3 to 7 year bonds, coming back now and setting an all-time high. Trend channel coming up, almost getting to the upper end of this trend channel going back to 2009. The growth to value ratio showing some improvement here with Qs to the S&P, seeing a big improvement with discretionary to S&P, also seeing an improvement when we compare large cap growth with large cap value. And we're seeing an improvement here with the large caps, really nice improvement with the mid caps and small caps. The S&P to utilities ratio going back up. Now, the context is it pretty much has been going down lately. If this could continue to go up, that means the S&P is outperforming utilities. And utilities had been doing really well, but have been seeing some recent weakness. And the staples to S&P ratio, when this is going down like it is now, it ticked up a little bit on Friday. The context of this is that it's declining, and that's more positive for the S&P. Now we have one chart on the negative side, and I could have kept this on the positive side. It's a ratio between the semiconductors and the Dow. We have the Dow setting all-time highs. The semiconductors are okay, but we're getting close to seeing a death cross in that particular area of the market, and that's a huge part of the tech sector. We want this ratio to go back up if we're more positive. We've been kind of chopping sideways. We're not falling apart here, but we would like this to be stronger than what we're seeing right now. So we'll keep an eye on this one. Then there's some areas that I'm watching. We want to keep an eye on jobless claims. They will come out on Thursday. They had been really going back up enough to send the 4-week moving average up. That's really what we follow. But the last couple of readings have been really low. That means the employment situation is looking pretty strong on a week by week basis. But with continuing unemployment claims, those folks that are unemployed longer than 1 week, those are continuing to go up. And so that's a little bit of a concern. We want to see if that's going to continue to trend higher. This is another area. We look at the S&P and the home builders ETF, and then we do a correlation between the two. And you see how we're really dropping right now? Other times when we dropped, sometimes that marked a bottom for the S&P. Other times that are not on this chart, this ended up being more sideways action, but other times it actually marked a top in the market. We want to see the home builders doing better than what they're doing right now. They've been under some pressure lately because interest rates have been going back up, and that's a very high interest rate and sensitive environment. We want to keep an eye on the dollar. We are still in a downtrend as measured by the moving averages, but we're still above the 200-day moving average. Now, on one hand, that's positive because it's like, hey, people have confidence in America. That means they have confidence in the dollar. It's not backed by anything. It's called a fiat currency, but no other currencies are backed really by anything. So, yeah, the US dollar may be crap, but it's the least crap compared to what else is out there. So we'll just keep an eye on this because typically the stock market likes a weaker dollar. And then we look at traditional Dow theory, setting an all-time high with the Dow, coming and looking a lot stronger with the transports, but now we're seeing utilities lagging behind after they had been really moving quite a bit higher. Just something that we're keeping an eye on here. This is another area. It kind of goes in hand with the home construction study that I was showing. We want to see this ratio going back up. It's not falling apart right now, but when you compare the home construction ETF to 3 to 7 year bonds, we want this to go up the way it was earlier on over the summer. So we'll just keep an eye on this one. And then oil, we're mainly watching this for geopolitical reasons, and it really hasn't moved all that much. It's been in the low 70s, even into the high 60s, not really bouncing, but that could change. So thank you. I hope you found this helpful. If you want to get updates of these charts and the analysis that I do, please consider watching the daily videos. I hope you have a great weekend, and I will talk to you in the next video.